Hey everybody, Boris from Forex. Welcome to the weekly section for the crosses for October 8th to October 12th, 2018 for our weekly technicals. And the crosses are actually very interesting because, as I said, the dominant theme this week is actually two dominant themes, I think. One is the clear evidence of risk-off flows as we entered into the end of the week. And if that continues, there's certainly a couple of pairs that are going to respond very, very powerfully to that. But the other interesting factor has been, I think, the strength of the cable as a relative strength trade, and of course the obvious weakness of the commodity dollars. And that tends to be also a very explosive trade on the charts that may, I think, have some continuation as we go forward. So the three pairs that I picked up, in my opinion, that look interesting this week is Aussie yen as a clear risk-off trade. There's still about 80-90 points to key support, and it could really break that all the way through 78.50. The massive breakout, the pound relative strength trade has been strong against everybody, but against the Aussie it's just been a monster. And even though it looks very, very overextended, there's still possibility here for 188. All of these, the bigger COM dollar majors trades are massive ranges, so trade accordingly. You have to give yourself a massive amount of room. And basically, I think I would really trade this in many ways. Either it's all systems go, I would try to get out, because the range is so wide here that if you're going to accommodate 400 points worth of stop, it's just probably not going to be worth it. Euro Kiwi, 180 to the upside, 177, also a big, big breakout. Let's take a look at that actually first. Look at this massive three-candle move in Euro Kiwi, taking out the highs here. That now puts 180 squarely in play. This is really, of course, as much a trade on Kiwi weakness as it is Euro strengths, but there's, any kind of potentially positive news out of Italy for a minute or a second could certainly push us through this level quite strongly. Also, the Kiwi itself has just been so weak that it can test the lower end of its range and just simply push Euro Kiwi to the upside. I'm looking to see if there's any serious resistance here, and there really isn't. I mean, we can go to the weekly chart here, and you can see that even on the weekly, it really is just it's brutally strong to the upside. Big moving averages on the 20 to the 500 on the weekly, which has been like a several years worth of a signal. And this massive breakout to the upside has certainly potential, especially this 180, which is a big psychological level, is just begging to be taken out. So that's an interesting look here for a trade. Let's take a look at the weeklies here on the pound Aussie, which also looks very constructive here. The weekly chart, also huge breakout right through this 86 level, opening up the full 190 move, which we haven't seen in more than a year and a half. And generally just kind of a very positive technical structure that we like to see, where you have consolidation and starting to separation of the moving averages. This is all the weekly charts, so it really suggests a very, very powerful move underneath. If you look at the daily charts on a more granular basis, look at this move. It's just, it's extreme. Now, it's tough to buy these kind of moves because they're so far extreme away from moving averages. They're really stretched out, but they also tend to be the kind of moves that have huge momentum behind them. So if I was going to chase this, you'd have to just chase it with smaller size and give yourself the room of this whole candle to see if you can extend all the way up to the 188s on the trade. And the final trade, which is a much more muted trade from a range point of view, of course, this is the Aussie yen. This is really a clear risk-off trade here. There is support at essentially 78.50, somewhere around there, but the move here, that's actually about 100 points away from here, so it's really quite a move here. So there's still scope here for a move to the downside, and more importantly, I think it's just a symbol of the weakness in equity prices, which is going to play itself out even more so. I mean, if we start to have a 300, 400, 500 point move in a Dow, 30, 40 point move in the S&Ps, all of that is going to just take the Aussie yen, which is the quintessential risk-on, risk-off trade, straight out to these swing lows that we've seen set in September. And if we go back to the weekly chart, the support, well, we have the first support over here on the weeklies, but then the support beyond that really drops all the way down to 75s. Also notice that these kind of big candle moves, if they do have, sometimes we had the big candle move to the upside and that failed here, just simply stalled, right? The next week, which was a signal that maybe we're going to have a reversal. Now we have the reversal, and I think the key thing to watch here, and I guess maybe if I was going to if I'm going to zoom in. So this, what is the low here? This is about, I guess, the 79, the 79.80. This is the key area here. The beginning of the week, the battle will be around the 79.80, 79.70. If we take that to the downside, if that slices further to the downside, it opens up the full move all the way at to 78.50. That's going to be the key support. If they hold it, then we have a potential maybe to retrace some of it back up. But if they can't, the break here is going to be sharp and strong, and you want to follow it. So if you don't want to jump in on a pure sell at this point, I'd wait to see how they trade 79.80, and if that starts to break to the downside, I would join the move because it looks like it's going to get a much sharper sell-off as the week progresses. Wish you guys the best luck, the best of trading. Boris, over and out.